Good afternoon, traders. This is Christian from Tribeca Trade Group, and today is Wednesday, March 16th. One more day to St. Patty's Day. The Fed Day, obviously, today we're going to go over all of that. Let me just bring up the risk disclaimer. All right, there is the risk disclaimer. Please go ahead and read that on your own. But bottom line, everything that we're going through in this video is for information purposes only. So look at this monster move today. SPY up 2.2%. Qs accelerated to the upside. They outperformed, up 3.7%, along with IWM, which is up 3.1%. Bonds actually rallied today too, which sometimes you really see these whippy moves in things like bonds, as well as gold, as well as a few other things like currencies too. What I found interesting too was the VIX, right? The VIX all the way back down to 26. So that finally cracked. Right? We've been talking about how the VIX has kind of been giving a little bit of a signal, right? Specifically last week, I talked about that when I was on Benzinga pre-market, and I talked about how the VIX was actually down last week, right? When you look at the week over change, the VIX was down last week, and SPY was also down. Right, that normally doesn't happen, and that was a bullish divergence, and I thought a pretty good signal for that. Again, you kind of have to say like that, put this in the whole frame of factors that you use, because the market was still down on Monday, right? And Monday I thought was pretty tricky. So there's not immediate gratification with some of these things. You just kind of have to be patient. But that was definitely a head scratcher from last week, seeing the market go down and the VIX go down as well. Again, that's not supposed to happen. When I put this information out on Twitter and so forth, I got a lot of people trying to rationalize that, trying to come up with a reason for it. I wouldn't do that in your analysis. I would just say, hey, that's something that's not really supposed to happen, and understand that it's a bullish divergence, and take it from there, right? The object is not to come up with some reasoning for that. I think it's a good, take it as a signal and go from it, and then put it in your analysis, and then decide what you're looking for from there. Again, any of these things that we kind of talk about that are a little bit different than following just price and trend, right? It's one of those things that you want to put in your overall analysis, right? One of the tools in the toolbox, right? To say, that's something that's different. Let's take it and let's analyze further, right? So what do we have for the S&P? Well, I love this on the daily chart. We did get into value. We made a nice move here in S&P futures, up 2.5%. That gets us back to where we were at the end of February. Remember, a couple things that I've been mentioning here, and I'll go through them because we have a change, I think, today, right? So one of the things that I've been talking about, how I've hated this this last couple months, is that the S&P has been making lower highs, right? Here's a lower high. Here's a little bit, try to get over this recent move, didn't work. Another lower high, another lower high, another lower high last week, but maybe we're trying to break this pattern, right? So first step is we needed to get back inside the value area for the month of March. Remember, volume at price is what I really rely on my in my analysis. It gives me some nice levels to trade against, not to make predictions. Remember, the goal is not to make predictions. It's to basically think about things in terms of risk reward, and have a level to trade against. So that's good, and that's something that I'll be watching. Also, just to talk about the Fed meeting today. The Fed days are always tricky. And I had said this in the trading room. I said specifically, hey, I'm happy that we're actually going down. The initial reaction, oh, look at that. We took out a 5-minute VPOC there. The initial reaction was lower, right, off the 2 o'clock headlines. And then it kind of turned around as Powell started to speak. Right around 2:30. That's a better way to go. And it's not always this way. Sometimes the market goes in one direction and stays in that direction, but I've seen it many times do this. Sometimes, and I think the last Fed meeting, we started to go higher. And then by the time Powell started to speak, the market went lower and stayed lower. That was the last Fed day. So I said I was happy with that outcome, and the value area, and this is why we use multiple time frame analysis. But the 5-minute touch of the top of value was a nice place. It looked like the market was just going down a little bit unnecessarily. Because I didn't think that there was anything really that was um, that surprising when we got the 2 o'clock headlines. So you got this nice move off of here. It looks like there's another VPOC over here. And then, the third time frame that I always like to look at is the hour as well. That also gave a nice touch. And we actually went a little bit lower on the developing portion of the 1 hour bar, but it closed above value. So not bad. And then the last thing that I'll look at, which I put this chart out last night on Twitter, is that, hey, maybe we can finally get above this down. I actually drew in a downtrend line and said, hey, it's not that far for us to get above, right? So one of the things that I've been talking about in this video, in these end of day videos, is the 80% rule, right? We did not complete that. We could be leaving that for another time. There's a lot of different scenarios that we could go through this year. Keep in mind, we're only midway through March, so we could get a material, bounce here, right? And in these mid election years, the second year in the cycle, it can see a decent bounce and then could see come back to the lows. Keep in mind, one of the things too is that it's not 100% that we go down to the bottom of value. It's 80%, right? And there's a 20% chance that we don't do that, right? We also got very close to this too. It wasn't perfect, but we got very close to it. So we'll see how it goes. For now, right, I'm not really worrying about that. What I'm worrying about is if we can stay in value, right? And possibly we could get up to the 50-day moving average, as well as the 200-day moving average, which is this death cross that is, there's a lot of headlines about that, but that could be a place to kind of take your money after a solid bounce and then watch a little bit in here, right? So that's one way to look at it. But overall, for a very jam-packed week, headline-driven week with the Fed as well as quadruple witching, so far so good. So if you feel like you got left out of this move the last couple days, again, look at this overall chart. We're basically right back to where we were just a couple weeks ago. So that, I think, helps puts things in perspective. The other thing that I use this for, even if I'm not trading the S&P, I'm just using it for support and saying, hey, I want to be more involved in this market if we're in value. Right, so that's the S&P. Of course, I spend more time analyzing the S&P chart than anything else. But you're going to see. Oh, and then the last thing before we go over to Nasdaq is the 20-day moving average. Right, I've mentioned that we've been capped by this 20-day moving average since this fake out move back in the beginning of February. Right, so here was the 1-day move over. Got rejected the very next day. Rejection here, 20-day moving average, rejection here, 20-day moving average, rejection here, 20-day moving average. So maybe we can kind of build off of this now that we're back above. So again, I'm pleased with what I'm seeing here. But as we've said before, one day is not a trend, and we'll look for some follow through, right? Or even an inside day tomorrow would not be a bad thing. And there's your Nasdaq above the 20-day moving average. Right, and also inside value. I didn't really look at IWM too much today, but that has been kind of hanging around, and that'll be interesting. We're at the 50-day moving average for that one. All right, so that's a couple things that I thought were notable in the index charts. Just to kind of go through, I'll give you 5 names that I'm looking at. Let's try to do this. Well, there's not always 5 names, but I just thought that would make sense to kind of look at some things. Yeah, and actually there's one other thing that I wanted to look at too. Gold, right? So the downside, right? I think in the trading room, we talked about, how gold and a lot of the commodities have been acting together, which I thought that they would, as we talked about in the weekend member macro video. We had this 1 hour VPOC being taken out, and we actually went down today and took the second one down. So we'll see if gold wants to rebound here, right? That's the second one. There's another one that lives all the way down here, but it's pretty far away. So we'll see if gold can bounce a little bit more from here. The level, and I think I mentioned this level in yesterday's video too, but I would watch 1934. All right, and then just lastly, bonds. Might as well look at all these. Just amazing how this risk off type flight to safety move that happened a few weeks ago is completely being taken out, and we're back to the mid-February lows. Watch that support there, 150.29 in the bond future. So here's how I traded for the day. Just a lot of scalping, prior to the Fed. I thought it was important to kind of get out of some things before the whippy action started, but NVIDIA was a nice day trade for me. That worked pretty well. I also added this LNTH, right, which I've been watching for a while. So this did get out of this bull flag, which is nice, right? Nice to see that. Right. So I decided I've been watching this name for a week. I kind of missed it on this move. So let's see if we can get another leg out of this. Again, something, we haven't seen a name really act like this in this year, I'll say, in 2022. So that's nice. But yeah, I basically just got out of some things. I even tried a little reversion trade in CF today, and I got out of that pretty quickly. Tesla, I tried for a day trade. I think I hit a couple targets in that one, and then went into some Apple post the Fed. Right when Apple dipped, same concept as we were looking at on the 5-minute. I do like this VPOC takeout, by the way, and reversal. Right, but here was the move, right? And I was just in this for a couple bucks. I just was just in it for a scalp. Here's the check into the top of value. All right, so trade a little bit of that one. So my first trade, and I'll talk about one that I did add today. I traded a little bit of shop there at the end of the day too. We saw some calls hit the tape, which worked. And I'm long those for an overnight trade. We'll see how that goes. Ulta, right? So you kind of go back to some of these names that had good earnings that just the market was really tough sometimes when these names reported. So this is one that I like, right? Took out this VPOC, and a TTG member actually brought this to my attention yesterday, and making this nice after the version point of control takeout, right? You had your fade, but the price is back out there, and I like names that get coiled like this, right? We talked about Regeneron last week, right? That worked really well, right? That's a member of our TTG trend portfolio. But here's an example, right? We talked about, hey, waiting for this to kind of get out of the value area, which was here. That was at 629. Stock's up to 6, hasn't looked back, 677. But again, the power of like really heavy consolidation and coiling, right? When 3 moving averages are wrapped around one another and you start to break out of that range, you got a nice move on your hands. So again, and it's nice to see a couple names that, and I'm still long some VRTX as well. This thing got up to 648 today. Has been making a nice quiet move. You just don't see too many people talking about this. All right, so my first name was Ulta. Broadcom, which I've been talking about for the last couple days, because it's also coiled in here. Also a name that had really good earnings, but just and it reported earnings in a tough tape. All right, so I know this VPOC isn't that far up there, but I think this 624 could definitely be taken out. That's number 2. Another name that TTG member brought to my attention, which is Cognizant Technologies. I like this move, and notice how well the last few months this name has been holding up, right? So it's a tech name, and it's been showing some nice relative strength. So I think this one gets back to the new to its all-time highs, right? That's number 3. Another one that's been coming up on my scans the last couple of days is Paychex, right? So Paychex, again, similar type of feel here. Now this name reports earnings when? Is it next week? 3:30, end of month. But I like this same thing, building a little bit out of this consolidation and leaning to the upside. So again, not extended. That's a name that I will be looking at tomorrow. I did not go crazy putting on positions. And then a bank, right? Remember how strong all these Canadian banks were a couple of months back, right? Well, they hung in there. Uh, definitely dipped, but this BMO is back to very close to back to highs and performing better than TD. TD is another one that I've been watching, and has made a nice move back, but not above the 50-day moving average yet. But trend is definitely strong. Another U.S. bank that I've been watching is this. Whoops, I didn't get to the China names, but I could definitely talk about that. What's this? What's the symbol? CINF. This is a Ohio bank. What I like about this is not so much, I'm not crazy about the candle for today, but look at the sideways movement here and notice how the 200-day moving average caught up to the price action and extending higher. So I like a couple of these banks here. All right. And I didn't talk at all about the China names, but my goodness, just absolutely huge moves today. Congrats if you're long these names. I don't really know, to tell you the truth. So if I don't feel strongly about something, this was a huge momentum move today. And it will be interesting to see where these things could get to. The bottom of value for the month is all the way up here at 35. I mean, who's to say that this can't come back and get, and try coming up to 35, right? They're so beaten down. But there was so much momentum, so much option activity. The one name, I know everybody's talking about BABA, but even this PDT, it's just remarkable, right? How the low price that these things got, and don't let anybody try to fool you here that they got long all these things the last couple days, because a lot of these people have been long from much higher levels. This thing looked like it was oversold over here, and it bounced for a little bit, kept on going lower, and finally looks like it says maybe put in a short-term bottom in here, but still, I don't, these things are still very risky. What I said when I was on the Benzinga pre-market show this morning is that there's plenty of difficulty and plenty of names to go after in the US market that are depressed and beaten up. In my opinion, you don't have to add another layer of difficulty. I get it. Sometimes as investors, we want to tackle something that's really challenging, to say like a puzzle, right? Sometimes when you're trying to solve a puzzle, right, you go for the higher difficulty ones, right? Because you feel like, hey, if I can solve this one, right, the level of difficulty is so high that really means I'm a great trader or something like that. Right? I would stick with the easier ones, right? Why go after the ones that have international implications where you're dealing with a communist country versus, the names that are in the US that are also really beaten up. So that's my quick feel on that. And I think we covered enough in here for one day's video. Things that underperformed, of course, the names that have been really strong, as of late, those are taking a breather, and some of the other things, other areas of the market, right, are finally starting to come to life a little bit. I'm interested in this NVIDIA too, now that it's back above the 200-day moving average, almost back above the 50-day moving average too. So, how to handle this, right? So certainly a nice 2-day move, but you're not looking at anything extended in here. So I would just use the 200-day moving average as your stop if you like this, right? And if where exactly the trade doesn't work is if it stalls here and goes back below the 200. All right, guys, that's it for today's video. Have a great night. What a day, what a week. And if you're kind of surviving through this, I came into today very light positioned, so that I can be nimble in this market. So it's great to see the VIX back below 30, but make sure that you're staying fresh with this market. And I feel like having less number of positions, it really kind of allows me to kind of be objective with this market and take it for what it's giving me day to day. All right, guys, have a great night. See you tomorrow.